Welcome everybody to our Bay Area Housing Market Town Hall. I'm really excited. Today is already our 39th episode for our Bay Area Housing Market Town Hall. Again, there's just so much going on since last month. As always, I want to invite you guys to join us on YouTube. I'm so excited. A lot of you have subscribed and we now surpass 1,000 subscribers. Thank you so much for all the supports, and we'll continue to produce educational information for you guys so that you can be educated in the real estate market. Let's start with housing market stats. There's so many things that we want to share with you, but really last month, I'm sure everybody had experienced some kind of storms, and the rain is still kind of keep coming in and out for a little bit, which is really exciting because we haven't seen so much rain for so long now. But because of the rain, our housing market in January was definitely a lot slower. Typically, most of years that January 1st start, we see buyers start to come out, start to look at properties. But I would say the first 3 weeks of January, it was really, really slow. And it was so slow that it was even on the news that talk about how slow the market was. But things started to change. And let's just look at some of the statistics for the month of January. In terms of active listings, the inventory is still quite low. We don't see a huge jump on the inventory. Well, that's expected. Typically, buyers are ready first, but sellers start to get their properties ready after January 1st. So it takes them about 2 weeks to maybe even 4 weeks to get their properties ready before they hit the market. So we typically will see active listings probably increase a lot more in the month of February. And on top of that, if you look at number of active listings versus number of sales, and you still see that there is quite a bit lower of in terms of the number of sales in January, because the market just so slow in December and January. Even though we already have very low listings, we don't really have a lot of listings compared to last year. As you see, we peaked over almost 9,000 units, but at the same time, because buyers just really at this moment where they're not sure where the market's going. On top of that, even though 2023 started, the rain had really stopped them from coming out to look at property. So that's why you see that the number of sales versus number of active listings has such a wide gap. And in January, again, as we mentioned, a lot of buyers are not coming out. So you see that month of inventory has shot up to 2.4. But again, I am reminding everybody over and over again that normal market for month of inventory for a normal market is 4 to 6 months. So 2.4 months is still not a bad number. It's still actually pretty good. Although we're not used to it, because for many, many years, we've been seeing around 1.2 or 1 month of inventory. Things just move really fast, but 2.4 is still a relatively fast market for a normal market. All right, so what about the days on the market? We have gone through, again, like we mentioned just now, about 1 week, less than 2 weeks time frame to get the properties under contract. Now it has gone up to, in January was 28 days. So in January, definitely even longer than December, which is really rare. Again, go back to the rain, blaming on the rain, but then we do need the rain. So I'm not really complaining about it. I'm glad that we have the rain. It's just that it did affect the housing market a little bit. And in terms of the sales price to list price ratio, we've seen as high as 14% last year in April, and then it had started to come down slowly every month down to 99.4% of the asking price. So definitely during the last 2 months, December and January, a lot of our buyers were able to actually negotiate down the price to get it under contract below asking price. And in terms of how many listings withdrawn or canceled, these are typically happens when the seller is like, oh, forget it, I'm gonna just give up. I'm not going to sell anymore because maybe it's not moving, or maybe they feel like the timing is not right. So they will withdraw for now or cancel the listing. So, but we see that in the month of January, actually, the number of canceled and withdrawn has come down quite a bit compared to December. But December, of course, a lot of times, if the property is not sold by maybe beginning of December, a lot of sellers would decide that, hey, I'm going to take the listings off the market until the next spring or until next year when the market comes back up. So this is the reason why you see that there's quite a bit much higher on in terms of withdrawn and canceled in the month of December, and January typically we have much lower numbers. But if you compare to last year, our numbers kind of went back to about like month of April, which I thought is pretty interesting because the month of April was a very hot market back then in April, and January well, I would say also our inventory is not as high, so that's why we have less number of withdrawn listing and canceled listings. In terms of list price decreased, we are pretty much similar to the month of December. Not as many compared to September, October, November. Main reason is because that a lot of sellers are a lot more realistic now in terms of asking price, and they've learned that if they ask way too high, the property is just going to sit on the market. And hopefully this is what most of the realtors are advising their clients, and not to expect such a high price, because right now a lot of buyers are expecting sellers to reduce their price before they would make an offer. So a lot of times like sellers would try to maintain a certain price point that is a lot more realistic to what the buyers are expecting. In terms of transaction fell through, similar numbers as December 2022 at around about 74 listings for the 5 counties that we are tracking right now. The numbers are pretty low. It means that like transactions are actually going through, and there isn't a lot of falling through of escrow right now. Now we're looking at the median price for these 5 counties. Let's take a look at Santa Clara County. We mentioned before that we peaked in April 2022 at 1.95. It was kind of coming down pretty quickly, especially around the summertime, around July, August. And then December, because it was so slow, it came down even more. But interestingly, in Santa Clara County, you see the median price actually came up a little bit slightly from December to 1.5. And we had mentioned a little bit last month as well that we did see some of the homes we have multiple offers, although they're not aggressively way above asking price, but we definitely started seeing a lot more buyers start to come out and look at properties. And San Mateo County, it peaked in 2.25, and then it came all the way down to 1.48. It is lower than December's number, which was at 1.539. And Alameda County, we peaked in May 2022 at $1.5 million. Last month in January, it came down to 1.0225 for their median sales price. It also came down from December at $1.05 million as well. And as for San Francisco County, it peaked in April 2022 at $2.05 million, and it dropped quite a bit to $1.385 million in January of 2023. It actually came down quite a bit. If you look at comparing to December 2022, number was 1.55, and January is 1.385. It came down almost $200,000. As for Contra Costa County, it peaked in May 2022 at $980,000. It came down to $725,000, and also compared to December, it was at $755,000. So it came down about $30,000 for Contra Costa County. So if you look at the percentage wise, Santa Clara County, like I mentioned earlier, it actually has gone up slightly from 1.465 to $1.5 million, which was about 2.39%. But if you look at year over year, it compared to last year's number, it came down about 12.9%, which is about 13%. But if you compare to the peak, it came down about 23%. And San Mateo County, it came down about 3.83% from last month, December. And then if you compare to last year, it came down about 18.49%. And then when you compare to the peak in April for San Mateo County, it actually came down to 34.22%. Now, Alameda County, it dropped about 2.62% from last month, but it dropped about 14.6% from last year, and about 31.83% from the peak in May. And as for San Francisco County, this is a big one that we mentioned just now. It came down 10.65% from last month. However, if you compare to last year, it only came down like 4.91%. So that is pretty drastic change. But if you look at the peak in April, it came down about 32.44%. And lastly, Contra Costa County, it dropped about 3.97% from last month and 7% from last year and 26% from the peak in May. So as you see that it has quite a big difference. Again, the pricing has gone up a lot since in the beginning of the year, and that's why it sees such a drastic change. Now, the question a lot of people are probably going to ask is that, so are we going to continue to drop even more from the peak? I think in terms of the year, like compared to last year, it's pretty we kind of expected this range, but obviously when you compare to from the peak of the pricing, it looks quite dire because it's 20-30% of the value has been dropped. And we're going to take a look at a lot of different macroeconomic factors based on those information and see where the market is going to go on my later slides. All right, so what happens on the battleground? Obviously, we want to share with you live what's going on with the offers that have been submitted. And here are just some examples for you guys. In the city of Santa Clara, single family homes, asking price of 1.349, they received multiple offers. If you kind of just look down this column, you see that a lot of multiple offers, right? And it was sold for $1.5 million, which is, and not bad at all. It's still pretty high, $150,000 over asking price. As for townhouses, here they have 3 offers in 6 days, and they sold it to a cash offer. And this is what we are also noticing these days, is that sellers are so willing to accept cash offers, even if it is a little bit lower than a financed offer. So you see that just based on this chart, we already have 1, 2, 3, 4, 5 of these examples that have accepted cash offers instead of financed offers. And then here go Mountain View, asking price at 1.6. It did take about 20 days to receive 2 offers and ended up selling below asking price. And while a fixer in Mountain View, but is a single family house, it had received 14 offers and 55 days because they dropped the price, and the asking price dropped down to 1.5, and they sold it at 1.57. So I think if last year we had 14 offers, this would have been like 1.7 million dollars, right? People will be, bidding like $700,000 above asking price. But in this case, even 14 offers, it is just about $70,000 over asking price. Now in Palo Alto, single family, asking $3.1 million, and they received 4 offers. They accept cash offers at 3.1. If we come down to South San Jose, for single family, still getting 5 offers in 3 days, and they accepted a cash offer above asking price. If you continue to go south a little bit, Santa Teresa, for a condo, even though it's a condo, it received a cash offer in just 3 days. Let me skip over to Cambrian, which is also in the San Jose more southwest area, asking price about 1.4. They received 4 offers within a week, and they sold at $1.5 million. Now, these 3 are in the East Bay area. As you see, that same thing, we're getting multiple offers, although you see that this is a longer days, but then it's also because the price have come down a little bit, and then they start getting a few offers, which in the end is still below asking price. So here you kind of give you guys a sense that there are still a lot of buyers on the market. There's still a lot of interest in coming into the housing market. It's just that buyers are a lot more conservative now. Unless the house really does have everything that they want, then the offer price could be slightly more aggressive, but otherwise buyers are still pretty conservative in terms of making their offers. Thank you everyone for attending this. See you later. Bye-bye.